Hello, traders. Good morning and happy Thursday to you. It is the 1st of September 2022, 8:01 a.m. Chicago time. Thanks for joining me on episode number 2306. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So this morning, we're seeing a market that is even more risk off. Market has sold off slightly across the board. We can see Europe's getting hit the most here. As as yields in Europe push towards the highs, the most recent highs, which caused the last sell-off. Here's a kind of a view of the 10-year yield, just as an example. This is, of course, not comprehensive, but this is just an example of where we are. You can see it moving up towards the 180 basis or the 1.8% where we were. The other piece that is driving this movement here as a result is the DXY, or the dollar index, US dollar index, is also pushing against the most recent highs, putting a lot of pressure across the board. So that's where we are this morning. Back to our Convergent Trading pre-market summary sheet. We see the impact as these markets sell off. Then there's likely to be less demand for commodities, and so we see commodities falling. Crude oil trading at $88. Crude has had a range of $89.63 down to $87.12. So it was down over 2% this morning. We see copper coming off. We see silver and gold coming off along with the indices. So across the board, selling except for the US dollar. That's what we're coming into today. Clearly risk off. On an earnings basis, we had Hormel Foods this morning, and we get Campbell Soup later as you know, two of the bigger ones. And then after the market, we have Broadcom, which is a major player. Broadcom expected revenue of 8.37% and $9.56 earnings per share. And then we also get Lululemon, or Lululemon, depending on who you ask. Not sure how that's said. This is a very popular athletic wear retailer. That's also expected after the close today. The big driver this morning is China. Again, China shuts down several districts within the Shenzhen region. They shut down 3 districts within the Shenzhen region as a result of their zero tolerance policy for COVID. This is bad news across the board. In addition to that, Taiwan has shot down a drone after the drone failing to respond, and other measures failed. They resorted to shooting it down, and they did shoot it down. China's denying that this drone is theirs, although, you know. And then again, Europe under yield pressure, along with the US dollar pushing highs. And then, of course, tomorrow we get the non-farm payrolls release out of the US, major figure for the Fed. So we're expecting non-farm payrolls to come in at 310,000 added jobs for August. The unemployment rate is expected to hold at 3.5%. So those are the key big picture drivers and events for today. Looking at the S&P has traded 312,000 contracts, pretty heavy, statistically heavy compared to prior sessions. The inventory is 98% short. We sold off right off the open on the S&P, so the inventory is 98% short. We've got 40 points of range so far today, with the point of control shifted down at 39.3225. It looks like it might shift up to 39.35. with a low of 39.21. There are several things down in this area. The 39.19 down to 39.13 in the S&P are expected to be relatively decent support. Be careful today. The structure that we have here might set us up for rotation higher. We bounced pretty well yesterday. So let's take a look at what was expected yesterday. Here's what was expected yesterday. I was looking for it to drop down, test towards the overnight low, and I was looking for it to push 40.20 and start moving towards 46.50. I was anticipating a bounce yesterday, which we did not get. We ended up getting a bounce, but then later in the session, it reversed and started driving down pretty well, and actually got to the 39 or close to the 39.54 target. Remember, the big target for scenario 2 is 39.54. Here's what we actually got yesterday. Yesterday, we had a pullback just as expected in scenario 1. Then we started a push, and the push had pretty good lifting in it. Pretty decent rotation up on the push up, and it got to 40.17, took out the 16.50, which was the first target we were looking for on the push up. Took out the 16.50 to 17, pulled back to the day generated numbers. We saw a fight here, and then it just could not take these references out and started pushing the other way, breaking the IB to the downside. So now we're trading off of mid VWAP to the downside, and it ended up pushing. Remember, the 54 is the number that we're looking for down here, and it pushed 39.55 and then until the close. So it finished up at the low yesterday, settling at 39.5650. Quite a bearish close yesterday. We expect continuation down. However, the overnight session, if we look at the overnight session here, the overnight session very balanced. Very balanced. We have a weakish low with the current price at VWAP and at the overnight point of control, leaving the full session mid up higher because we pushed up and then fell, leaving the mid up higher than VWAP. And to me, this may be the beginning of an attempt to slow down and rotate up. Yesterday was expected to do that, and the overnight session was positioned or postured to do that. It was postured to hold the overnight low and start squeezing higher, but that squeeze higher only brought in more sellers, and the sellers stayed persistent all the way down to close at the low. I mean, yesterday's low is around 39.55, and we settled at 39.5650 in the RTH session, which ends at 4 o'clock. We did sell off a little bit after that right here, but overall, we closed at the low yesterday. So we're looking for a neutral day type, and the reversal is not really real until we have a close in the upper quartile of the day's range. So we'll see how that works. On the bigger picture, here's what I'm getting at. You're looking at, even though we sold off, just like we see, here's the clue that matters. So we have lower high. So this is the big selling day last Friday. Monday, lower high. Tuesday, lower high. Wednesday, lower high. So we are TFD. One TFD, or one time framing down on the daily. Okay. But look at value. Look at value. How did value migrate yesterday? How did value do yesterday? The overall value didn't really shift down. We kept the point of control in line with the prior session. And again, I am really, even though we're opening down here, I am expecting the market to come back and tag this, given the range that's already covered. The fact is the trend is down. The fact in front of us in price is that we're one time framing down. Trend is down. I'm not saying get long. Don't get me wrong, but I am saying that I don't expect this trend to continue given the way the market is configured currently. Okay? So what I'm saying is be cautious. Whereas after the big sell-off on Friday and after Monday's trade, I did not have that caution statement. I was looking for it to push even further down, and it did. I was looking for 39.90, 39.80, and then 39.60, 50, right? And so there wasn't that caution, but I'm telling you now, with balance, despite price action, and those people who just believe in price action, have at it, whatever. But I'm also a value trader, and value is not shifting down with price. And this is a warning. Now we're gapping down, and I'm expecting a pretty strong push, responsive push up at some point in the session. Could be immediately on the open, it could be later, but they're likely to come back and attempt to regain this 39.80 area and to start working through the numbers up higher, the prices up higher. We'll see if that's true or not. I'm going to trade what's in front of me, but I am going to take a cautious tone as to what's expected from the sell-off. This has come a long way. Okay, so not anticipating, just being cautious and being aware of what the market has done and responding accordingly. Let's switch back to the ES. So let's look at this on a volume basis. You can see here, point of control. Yesterday's point of control did not really shift all that much. And then I'm expecting this is a weak low. I'm expecting that low to be taken. There's a fair amount of consolidation, a fair amount of support here. Like I said, between 39.19 and 39.13. I'm expecting that to get squeezed, and then for this thing to revert back and come up on the top side. That's basically what I'm looking for. So that's where we stand. Not much else to tell you. Relative delta overnight is pretty steady on the sell side. We're down. I think the cumulative delta is down 9,000 contracts or so. 9,000 contracts right down here. No participation by the very large lots. A small trend by large lots, and then most of this is dominated by small lots. So we'll see how this response comes in, but currently the delta is not agreeing with my assessment. But then again, we're opening in a gap down, so I admit, and I'm not denying, that this is bearish given that the inventory is very short and we're trading below yesterday's range in a gap down. But what I'm saying, and to be clear so that I'm not misinterpreted, I'm not saying get long. I'm saying if you're short, be cautious, expecting it to continue to trend lower from here. Be cautious, and we'll see what happens today. We'll talk about it tomorrow morning, but I'm going to be pretty tentative about structured short trades. I'm not saying get long and prosper. Get long and prosper with this. But what I'm saying is just understand that the trend has come a long way. We're pushing into support, and I'm seeing signs in the volume profile and in the market profile that the sellers may be getting some headway, but they're not making as much progress as they were the last couple of days. That's basically it. So I'm going to leave you with a quick breakdown of what's expected for today here. So the expectation for today primary scenario, we do have a weak low here. We do have support right under here, expected support under here. The primary scenario is an open auction out of range. I'm expecting these guys to poke and check for sellers early on. If I'm expecting buyers to step in looking for an impulse higher back to the open and consolidation, I'm expecting it to tackle the mid here and then fill this gap back to settlement. So the big trade of today for me is going to be the gap to settle trade. In other words, any test below that fails to push through, any opportunity to find some area to lean against long, I'm going to look for that. Hopefully it'll be sub 39.30, looking for a pushback to 39.56.50 as a primary scenario. Okay, secondary scenario, and you know, that's pretty tight range. This thing can really continue to push. There's more range available than I'm showing here, but that's my main trade is a gap to settle trade. Secondary scenario, an open auction that immediately responds, pulls back to the prior low and prior settlement, consolidates here, and then falls and then holds steady, giving us a lower low, lower high, but expecting higher value, expecting value to move up here and be in line with yesterday's range. So this is another day where we're setting up to slow down. We're not quite finding the buyers. We're not really slowing down. We're setting up for it, and then non-farm payrolls tomorrow will decide what the fate is of the immediate auction. Those are the two pieces that I'm looking at. Of course, we're opening in a gap, so there's an immediate third scenario, and that's scenario 3. Scenario 3, open response drive, open test drive, or open rejection reverse, pushes right through support, and this is basically a bloodbath for buyers if this takes place. If we do get that drive, not expecting a response in both scenario 1 and 2, but if it's not there, man, this really could squeeze more people to the downside. We'll see how it goes today. In either case, define your areas that you want to participate, define your price map. Wait for the market to come to you. Don't go chasing trades. Don't go searching for trades. Wait for the market to come to you. Put your trade on. Let the trade do its job. Once it's on, let it run on its own, and then wait for the next trade and rinse and repeat while managing risk, okay? Good luck, and I'll catch you tomorrow morning for non-farm payrolls. Take care.